sell it immediately. And if you are thinking of buying it, do not buy it. Please do your research. This is like one of the worst I've ever seen.
Coinbase was founded in 2012. It's an American company that runs the largest cryptocurrency trading platform in the world. And every single employee at Coinbase works remotely, and there's no physical headquarters. And over 108 million users manage their crypto accounts on Coinbase's platform. With the recent collapse of FTX, that number may begin to drop. I don't know. It's hard to kind of read that. But yeah, I'll get more to that later. So just some of the numbers.
The Games Group, baby. We're all gonna get rich together.
Their medium cap, $10 billion, pretty medium in my opinion. No dividends. Their current ratio and quick ratio is 1.1, so they're not gonna, they're not in debt or anything. Their PE ratio doesn't exist because their earnings are negative. They're not negative by a little, they're negative by a lot. Minus 5.6 earnings per share. Next quarter supposed to be minus 2.3, which is a big improvement. I was like excited by that. And then the next year is gonna be even worse than it is right now. Minus 5.79 earnings per share. I don't know what the heck is going on there. Their gross margins, 79%, almost 80%. That's great. And then you look at their operating margin is negative 24%. I like this chart. You can see the operating margin of the past year or so. And if you look just last year, their margin was in the 50% range to 40%. And the profit is negative 22%. I was like, where is all this money going? Their revenue, they're pulling in 5.06 billion a year. And they have 80% gross margin. And somehow they're losing 24%.
The Games Group, baby. We're all gonna get rich together.
The co-founders of Coinbase, one guy worked at Goldman Sachs and the other guy was an engineer at Airbnb. Also, I saw there's a company in Silicon Valley that specializes in funding new companies called, Y Combinator. And this Y Combinator thing, they've launched companies including Airbnb, Coinbase, Cruise, DoorDash, Dropbox, Instacart, Quora, PagerDuty, Reddit, Stripe, and Twitch. They're in this kind of exclusive club. They give them advice and they have weekly dinner meetings and stuff like that. And they have successful entrepreneurs come and give them talks and stuff like that. So they clearly have the connections. They have some powerful institutions backing them like BlackRock. They're losing a ton of money. And so I was really looking into where they're spending it, right? On Yahoo Finance, I found this article from Fortune, and it says that they're spending $500 million in cryptocurrency. This is August of last year, and it said that the CEO said, getting board approval to buy the $500 million in crypto is just the beginning for the company. I expect this percentage to keep growing over time as the crypto economy matures. So I don't know what he's been doing the past year. He could have been investing more into crypto, and as the quote-unquote crypto economy has matured, maybe that's why they're losing so much money right now. Coinbase basically said they expect sales and marketing expenses between $500 and $600 million for the year, which is a lot of money for sales and marketing or whatever, but they're a big company, so maybe that's justified, I'm not really sure. But then costs for technology, development, general, and administrative expenses are expected to come in between $4 and $4.25 billion. I don't understand where that's going. And that's where I was saying, I saw that commenter. He said, quote, it takes a few people and some computers. Wake up. The other thing is the insiders have been dumping the money. The insider only owns 0.2% of Coinbase now, and they're down minus 8.85 in the last quarter or whatever period. I see a lot of red flags with this company, and I seriously looked back at this company trying to figure out why people like it. I found this one video from Yahoo where it had an analyst explaining his buy rating, and that was from November 4th of this year, so only 20 days ago.
What's driving your current price target? I mean, how are you coming up with the number that you're coming up with, the stock price that you're coming up with?
So we're basing it off EV to revenue multiple off our 23 estimates.
EBITDA is basically just earnings before you lose a bunch of it to debt and whatever the garbage. Right. So he's saying a multiple of their earnings was what they're calculating it for their next year.
And that's going to take into account transaction revenue, staking revenue. So
transaction revenue is the way Coinbase's business model works is they charge you to make transactions. Imagine if Robinhood charged you money to actually buy and sell stocks. They charge you for that kind of stuff because it's they have to do all these international exchanges. If you want to convert your crypto into actual money, they charge you 2% or something like that. That's where their transaction revenue, and that's 90% of the revenue. 90%. Yeah, of the revenue is those fees or whatever. So
that's not good. Okay.
I don't think it's good. Yeah.
We're pulling transaction revenue down a little bit. Staking revenue we've been increasing, and then interest income is starting to ratchet up a lot higher than we initially had expectations for in most of the street.
The reason why their profit margin is actually better than their operating margin is because operating margins before the interest, they kind of lend users money to trade with, right? To buy crypto with. And so the users have to pay interest on that debt. And so their users have enough of that where it's actually offsetting, but it's still minus 22%, which is really bad.
What's that multiple number?
So we have a 6.5 times EV to revenue on Coinbase, just relatively in line, especially when you look at something that does have the growth potential of crypto. in Coinbase once we do start to come out of a crypto winter.
All the analysts are saying, oh, it's just a crypto winter, you know. And crypto winters, they last 2 to 4 years. And I was like, bro, crypto's hardly been around at all. You can't just say like, oh, it's classic, crypto winter. We've seen this before. Maybe.
Yeah, they're just guessing at this point. I'm not gonna lie. The games group, baby. We're all gonna get rich together.
Porterfield First, I think, actually looked pretty good for them. I would say surprisingly low competition. It's pretty much only them and like Binance, not FTX anymore. Robinhood's also coming out with their own little thing, but I don't actually think it's a very competitive space. I say a low threat of entrance because there's a lot of international regulations to navigate. You gotta trade all these currencies and like do all these exchanges, and I feel like it's really, there's a lot of friction to starting a new company there, you know. The supplier power, I'm not really sure because I thought it was cheap to have a server farm, you know, to pay for like AWS to host your stuff, but apparently it must be very expensive. So yeah, I said moderate supplier power, but I don't know. I have no idea anymore. I'm doing high buyer power because I keep seeing like people keep saying like, oh, you gotta leave Coinbase. They're taking your money like
Scam.
Yeah, they're saying it's a scam. They're saying I'm losing so much money when I convert to crypto. They told me that there was no fee, and then they're taking all this money out and like blah blah blah. I think the buyers are starting to, they're gonna want to move, especially if Robinhood doesn't have fees in their crypto sector. I'm not sure. Low threat of substitutes. I was seeing places say they have a strong brand and like they have like Super Bowl ads and like they're a name brand. Everyone knows their name. Like if you think like if your dad was gonna start trading crypto, he might go to that. Like he might not know about like Robinhood or something. So and like it goes back to their expenses. They're spending $500 million, $600 million a year on their sales and marketing. So they do have a really strong brand presence.
The games group, baby. We're all gonna get rich together.
But yeah, the current value is $44, and the average analyst is pretty optimistic, which I'm not personally, but the average analyst is. So on CNN, the median was $67. On I think it was like MSN, the average is $75.68. And then I saw this other company that said average is $92 and a high of $205, which is like 4 times your money in 1 year.
Okay, well, they're really optimistic about that. The games group, baby. We're all gonna get rich together. Not only is their numbers are really low, they don't look promising. I do not trust where the company puts their money in their operational like expenses, whatever, like taking like $4 billion. I find that really suspicious. If they're remotely working $4 billion, I heavily.
Oh, and also this is while they're in a hiring freeze, and they also did a headcount reduction. So they've been firing people as well, like they're reducing their numbers to like trim their expenses and whatever.
But they're not spending on offices. They're not spending their money on anything, other like equipment and shit like that. What the hell where is that money going? When it comes to stocks and cryptocurrency, I do not like surprises. So I'm not investing in this company whatsoever. And for my conclusion, sell it immediately. And if you are thinking of buying it, do not buy it. Please do your research. This is like one of the worst I've ever seen.
I kind of agree with you. I think they're just investing a lot of the money into like crypto. The CEO is like, oh, we're like trying to brag like it will soon be the first publicly traded company to hold Ethereum, proof of stake assets, DeFi tokens, and other crypto assets in addition to Bitcoin on its balance sheet. Since I'm not a believer in crypto.
There's better investments out there.
Exactly. That's a fair point.
Yep.
What are all these sounds?
Wait, have you ever rap battles between Darth Vader versus Hitler, dude? Bro,
I've not.
That was the fucking best.